Welcome to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge for going on nearly 5 years. I appreciate you listening in, and we also have this available via podcast. If you go to any podcast, being Apple, Google, then you look up Professional Edge, you'll see that right there. So if you're unable to listen live, you can always tune in to our podcast. Once you subscribe, then any new and updated shows will be sent out to you, or at least a notification of that. So we're talking about being paralyzed financially. And what does that actually mean? Well, if you've been in the market, been an investor, and you thought bonds were a safe haven, well, they are a safe haven in a decreasing or sustained interest environment. But when the Federal Reserve announces that they're going to raise rates, think of the teeter-totter. And when rates go up on one end, then the value of your bonds fall on the other end. So this 60-40 mix, unfortunately for our listeners here on the Professional Edge and our clients of estate management counselors, our registered investment advisory firm, they have felt the pain of the market, being the equity side, declining, and also a rising rate environment where the Fed is interest rate sensitive, and they've raised rates here the past 2 times of 75 basis points, and they're expected to raise again another 75 basis points. So if you have these duration of bonds being long duration, let's say a 20-year duration, that means your 20-year holding period, then you're farther away from the fulcrum, so therefore your bond portfolio is actually going to fall even more dramatic than a short duration being closer to the fulcrum. So again, if you are not understanding of the duration of your bonds, and this is all like Chinese to you, and I think you're listening to Mandarin, well, then I recommend that you give our office a call at 877-654-9798. That number again, 877-654-9798, because a lot of our listeners here on the Professional Edge that have taken advantage of the complimentary consultation, they come in and they've not done anything. They've just sat there and stared into space. They're paralyzed financially. They don't know what to do. Well, one thing we can do, being a tax attorney and a CPA, is take advantage of the decline in value. And you say, wait a minute, how are we going to take advantage of the decline in value? Well, inside your after-tax account, some of these investments that you have may be at losses. So let's go ahead and capture that loss. Yes, let's sell that investment, capture that loss, and let's recognize it on our tax return. And therefore, we're going to be able to offset some of these gains, these capital gains distributions that are going to be forthcoming in future years. But what we're going to do is actually create what I call a tax asset. That is a carryover of a capital loss. So we can utilize this, and let's say we have $12,000 of capital losses inside your after-tax account. We're going to go ahead and sell those, capture that loss. That's all well and good. We're not going to sit on the sidelines because we're going to reposition those investments and avoid the wash sale rule. So we're not going to buy the same or similar securities and therefore avoid that capture and recognition of that capital loss. So therefore, we're going to make that $12,000 in our example a long-term capital loss or a short-term capital loss, depending on your holding period, and be able to utilize $3,000 of that loss against your ordinary income. So that is creating a tax asset. If what I just went over makes complete nonsense to you, well, that's where you engage a professional, being a tax attorney and a CPA and a certified financial planner, and we sit down and we analyze what makes the most financial sense. Yes, we are making lemonade out of these lemons, and it's okay. We need to just move forward and take advantage of some things that are what we consider on sale. So quit being paralyzed financially and move forward on things you can control. We can't control what the Fed does, and we can't control what the economy is going to do, but there are certain things we definitely can control, and this is one of those. Capture the realized loss and recognize it on your return. So again, to have a very candid, open conversation, that's 100% confidential. Give our office a call at 877-654-9798. That number again, 877-654-9798. So going back to being paralyzed financially, well, there are some preferred stocks which are yielding out close to 7%. So think about that. Your money market account is you're earning about 2%. We can go ahead and position these funds in here and get it 5%. So when you think about that, you move $100,000 into preferred stocks, you're going to get 5% more. So that's roughly $400 more per month. That might help and assist you going forward. So think about that. We do one click on the dial on the risk profile, and now we're at a 5 percentage point difference on $100,000. That's $5,000. That's roughly $400 more per month. So that's one click on the dial. Yes, are these interest rate sensitive? The answer is yes, but not as much as, for example, like bonds. So again, you got to take a look at your bond portfolio. If you're holding that 60-40 mix, unfortunately for our listeners here on the Professional Edge, they have been hurt because bonds have fallen given the Fed's rising rate environment. And they also have been hurt on the equity side because, quote, the economy is slowing. We have high inflation, food prices are up, energy prices are up. So consumers are under pressure. And if you look at the underlying factors, we're going to hit sort of a roadblock here coming up because consumers have not changed their spending habits. They are continuing to spend, but where are they spending from? They're gaining their extra spending power from their credit cards. Yes, the credit amount that consumers have is almost on a vertical line going north, which means we're going to hit a stopping point to where people can't access that credit. So where do you need to go? Well, you're probably having indecision, and therefore you're making a decision by not making one. I mean, think about that for a second. You not deciding to do anything is actually making a decision. So if you want to sit down and have an objective opinion on what you could do or should do going forward, do give our office a call at 877-654-9798. That number again, 877-654-9798. The other place you might want to check out is a website. It's called capitalatrisk.com. That is capital@risk.com. We've set that up for individuals which are very concerned about losing any more of their principal, so go check that out. Pretty good information there. So where do we protect our money from any downside risk? Well, there's always cash. We can always hold that in a money market account, but we remember that inflation is running about 8-9%. So we're losing 7% safe in holding cash on our purchasing power. That's the inflation bug that's biting everyone right now. So we can also do a CD. The CD rates have raised pretty considerably given the Fed's actions. And if the Fed's going to raise another 75 basis points, you might want to put some money in a CD because they're probably going to reach over 5.25% for a 2-year CD. That's not all bad. If we put it inside your IRA, then we're going to earn that interest income and we're not going to pay tax on that. So that might be an objective, being a CPA and a tax attorney on tax planning. And yes, if you're not getting tax planning with your investment advice, remember on the statement, they have that small little print, see your tax advisor. Well, with the estate management counselors, we do give our clients tax advice, being a licensed tax professional. That's part of what we do because the more you get to keep and not send to the IRS, the better off you're going to be as a client of estate management counselors. So we have the cash position, we have a CD position, and then we also have what are known as annuities. Yeah, don't turn the channel because I said the word annuities, but we have a fixed annuity that we've run across, and it's basically a 4.9% guaranteed, and that's for 5 years. So it's 4.9% guaranteed 5 years. Yes, it's based on the claims paying ability of the insurance company, but that's not a bad objective position to be in for some of your money. Not all of your money. Don't annuitize everything. Put all your money in there, because these are going to be hawked very aggressively to individual investors. Hopefully you, on listening to the Professional Edge, are not going to be taken away from this and say, hey, stop the bleeding. We're going to put you all into an annuity. Well, that's not the silver bullet, because there are some gotchas in there. And one of them that we've come across doing our due diligence is the contract from the insurance company is not really a contract. I mean, if you and I agree that I'm going to do X, lo and behold, I should be responsible for doing X. Well, we come to find out that if and when underlying conditions, then some insurance companies can actually change the rate in which they're crediting. That I don't think is a contract, and that's not in the best interest of our clients, and therefore we steer clear of them. But the one I mentioned, the 4.9, is guaranteed for 5 years. They can't change it, alter, or amend it. So that's not a bad proposition. So 4.9% guaranteed for 5 years. You get to withdraw 10% of your account value each and every year without penalty. So if that's of interest to you, or you want to investigate what might make financial sense for you, do give our office a call at 877-654-9798. That number again, 877-654-9798. So what about these equity indexed annuities? What exactly is that? Well, what it is a contract with an insurance company again, and they say if you place your $100,000 in here, and it can be anything over 10 grand, it can be up to $1 million plus, but we got to get approval for that, and don't recommend that for $1 million. But let's say you place $100,000 in this equity index annuity, and we have a 100% participation rate. What does that actually mean? Well, it says you get to participate 100% if the benchmark index, and we're all familiar with the S&P 500 index, you get 100% of what the S&P 500 index goes up to, but then they have a cap on where you cap out at. So the one I'm referring to is you can get up to 8.25% of the S&P 500 index. So going through an example, if the S&P 500 index goes up 10%, you're only going to be credited with 8.25%. That's fine. So you're going to give up 1.75%. Now you got to remember, your money is not in the stock market. It is a benchmark to figure out how much the insurance company is going to credit you interest-wise. So that's how an equity index annuity works. So stay tuned here on the Professional Edge. We're going to talk more about this. And if you are paralyzed financially, give our office a call at 877-654-9798. That number again, 877-654-9798. Thanks for listening to the Professional Edge. More coming up.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Sean Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Sean Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney CPA for over 15 years, Sean Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. Sean has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.